The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour with me, your humble, lovable, squeezably soft host, the koala bear of Wall Street, just small and cuddly and slow, and eating my eucalyptus leaves and making some wonderful sun tea out on the patio. Well, that's going to taste good here in just a little bit after the show. It'll be ready about 3:30. Be just about perfect. Sun tea, cool day, being able to actually open up the windows down here for the first time during the day with the sun out. So it's a little cooler down here. I see that for the weather forecast for this weekend, there are only 6 states not predicting snow of some kind somewhere. I suspect we are one of those. But it's going to be cooler down here. It's going to be cooler across America. And we're going to get that first taste of winter weather before Thanksgiving, which is not here yet. But even some of the things I see out here, including in the news, are things like leaks already for what is going to be the sale items on Black Friday. Actually, they're going to call it Black Thursday night, since now everybody opens up at 5 or 6 o'clock on Thanksgiving evening. But Best Buy is going to have a bunch of stuff. I noticed that they're going to have an ultra high definition TV for less than $1,000. I want to get one for my computer, but the problem isn't the monitor. The problem's the video card to drive it effectively. While you could get a card that would be good enough for something like Word or something like that, if I actually wanted to play a game with a 4K resolution screen, that would probably max out even the fairly expensive video display cards I have. I think I spent $300 piece on ones I have. And could it really do an adequate job? Okay. But I don't think it would drive it to its full. So while I want to get those nice new giant monitors, I keep on waiting for the price of the video cards that would significantly drive them to drop, and they have not yet. Anyway, it is a wonderful day out here, and of course, today being Veterans Day, we got together the TFNN Air Force and the helicopters from the Clearwater Naval A Station, and we're going to do they're doing a flyby here. I've got to check, just look outside the window here, see when they're coming by. But for Veterans Day, we're going to have, of course, a flyby. And today it's the helicopters from Clearwater. They're going to come right by here any second now. I think I see them now. And in formation, all 6 of the wonderful helicopters will go out and save your bacon out there in the from the Coast Guard. It will save your bacon if you're out there in the Gulf and things go awry. But it is a wonderful day, and thanks to all those veterans. I will always think of Veterans Day probably a little different than most. Growing up, if I looked over and stood on the doghouse and looked over the fence, I would look back into where the Arizona Memorial is now. And I didn't really recognize it probably when I was 6. By the time I was 10, and living on an Air Force base where some families' fathers did not come back. They were crews of B-52s. I saw a lot of people pick up and leave, and of course they left without their husbands and sons that were busy in the Vietnam War at the time. And it was, as a kid, your parents try to keep you insulated from it, but it was tough to I didn't actively seek it out, but I kind of knew something was on. And of course, so many of the shot up F4s would come back, and we'd go out on the flight line with our bicycles. We could ride anywhere. It was a better time, I think, especially then to not have to worry about being abducted everywhere, which I think everybody does now. They're sure their kids are going to get taken. And, you got to keep an eye on your kids. But I think we kind of got into the bubble wrap. Interestingly, though, by the time I was 5, they'd shove us out the door on our bicycles, and we came back at dinner time. And we'd go down to the flight line and watch blown up F4s come in and land, and occasionally we'd see gear collapse, and they'd all start shooting oil out all over the runway when they landed, or things would fall off of them. It was kind of interesting. But as I said, I grew up down there, was able to ride our bikes. There wasn't a lot of security, kind of funny on that, but we could ride our bikes up to the hangars that were there in World War II, and they never filled the holes from the machine guns from the Japanese fighters, and you could still go up and put your fingers in them. I went back a few times in the 90s and put my finger in the same hole I did when I was probably 6 or 7 or 8 years old. But always remember that freedom is not free, and I appreciate all those people that are our veterans and the families of our veterans that give up so much. So thank you very much. Today in 1993, the Wall Street Journal, I can't even say it. Today, the Wall Street Journal publishes a survey of 10 market pundits, asking them when the bull market, now 1,127 days old, will end. Nearly everyone predicts a 10% decline by mid-1994. That day, of course, the Dow is trading out at about 3,600. And famed market forecaster Joe Granville, for about the 15th time in 15 years, predicts a huge crash, and the market would go to 2,900 by the spring of 1994. And, of course, by March of 1994, the Dow is still at 3,600 or 3,800. It was at 3,600, so not a huge movement. But back then, 200 points on the Dow was actually fairly good movement between now and then. It was a little up, a little down, but nothing like it is today. It is, but of course, today it's one of those things that incredibly hard to fathom, because, of course, what were we looking at? The S&P's off 1 point, and I know some people would think it's Japanese water torture, just drip, 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 right on your forehead. They say it drives you nuts, but hard to tell. But always drip, drip, drip. Does kind of look like watching paint dry or watching the lawn grow today. It is tough, and what can you say? Drip, drip, drip. Now, one of the things that is common to markets that go sideways like this and drip, drip, drip is you will see some rather large moves in commodities. And I was talking to Andy about it yesterday, but pretty high correlation that you will, after a few days of equity markets going nowhere, you will start getting huge swings in the commodities markets. And if you go back and look through it, just look for, you don't know the reason why, but I suspect that you start seeing a lot more and more wicked movements in Forex and commodities as traders get out of equities trying to make a fast buck and move into commodities. Now, today, big deal? No. We're up 28 cents on crude. Gold, we're up $11.40. And, of course, the almighty dollar off 41 cents, which is, I think, probably more important than anything else that we look at right now. 87.50 on the dollar index. But I digress. Of course, they announced yesterday there will be a new sector in the S&P 500 instead of 10 sectors that have been there forever. Kind of like a record album. Kids wouldn't know a day when there weren't 10 sectors, especially if somebody was in the market now. Most people born in 1970 probably wouldn't know a market without 10 sectors in the S&P 500 indexes. But they're going to add one in 2016. It's going to take a long time because it's going to be a real estate investment REIT sector. It's going to take that long because of the restrictions for REITs that go back to the crash of 1929, where most of the money, about 80% of money, was lost in the REITs. When you go back and look at it, a lot of the stocks did okay relatively. The stocks that lost 98% or 99% of the value, REITs. Real estate REITs too. So you have to always wonder about that in a historical context. But there's going to be a lot of comment time and everything else, but not looking for these REITs, ETF REITs and the sectors to really hit until 2016, long time before then. Of course, Ford is out today. We've talked about this in the past, and that is that Ford is basically taking 700 pounds off their Ford F-150 trucks. Supposedly on the highway, these things with a small V6 are supposed to get upwards of 29 miles per gallon. I know that a lot of the car companies are being chased around by the government agencies because they pretty much just fibbed about gas mileage. But the question is whether or not this thing comes anywhere close with a V6 in it. 700 pounds in a V6, you might have a decent truck out there. Of course, more people will probably buy the small V8. As they say in racing, there is no replacement for displacement. And that will be it. Of course, as always, you can always give me a call at 877. That's 877. I'm dialing here. 877-927-6648. You can email me at path@tfnn.com if you'd like me to comment about a particular stock, or you can post a message in the den, although I know a lot of people, it's extremely quiet out here, but we will take a look at anything you have. Juniper Networks CEO left. This year has been the biggest forever, even as a percentage of CEOs retiring. And I wonder if that doesn't portend problems for next year. Anyway, Juniper's CEO is leaving. We'll be back in a minute.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Think or Swim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk, charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And we're coming back here, and what can you say? If you caught the show with Tom O'Brien and I on Friday, we talked a little bit about Taylor Swift coming back off of coming and pulling all her albums off of Spotify, and also having probably the biggest selling album in the last 10 years, at least for the launch. I said, well, you've got to wonder if once someone does that, who's going to be next? Of course, yesterday afternoon, we found out that Garth Brooks has started his own streaming music service. And anybody that's read the Tech Insider knows how horrible a business I think this is. And there is a kind of an interesting idea out here that I think is called reality distortion. Steve Jobs was famous for it. Doesn't matter what the reality is, just keep going after it as if it doesn't exist. Now, Spotify's CEO came out today with a long thing saying, you're going to get to 6 million from us this year. If we didn't exist, you get 0. Well, I'm sorry, Mr. Spotify, if you fell into a giant pit of endless despair today, someone else would take your place and Taylor Swift would get her cash too. So let's not be so world-centric that the earth spins around Spotify. I love your service and I love your stuff. The question is, what would she have gotten if it just played on the radio? And if you haven't ever been in a radio station, basically these people come around, and for every album you play, you got to write it down. And depending on the size of the market, you're giving them 15 cents or 25 cents or 50 cents or $1 or $2. And of course, since these people play the same song over and over again every hour, especially for probably Taylor Swift addicts, she might get $20-30 from a radio station every day. Of course, you got 1,000 radio stations over the country, and da-da-da-da-da-da. So is she going to make more money from a radio station playing her music or from Spotify? And the answer is from a radio station. So, again, this is a tragically flawed business model. And I think we're starting to see on the edges, at least the people that have enough power to push this, trying to get out of it. And I think especially at the high end, with Taylor Swift getting $6 million from her for the year, if the same people would have listened to her on radio, she probably would have gotten 11. And this goes back to how I think my dad used to say, why figures don't lie, liars can figure. And one of the tests that I had, I think it was in high school, was trying to figure out propaganda, although they didn't call it at the time. But how you can say stuff. And the example, I think the teacher that's always stuck with me, the teacher came with me, it was pound for pound, peanut butter has more protein than a steak. Well, that's all good and well, but I can eat a 16-ounce steak, no problem. I can't eat 16 ounces of peanut butter in a month. So there is a fallacy out here of apples and oranges. And whether it's Pandora or Spotify or iTunes or any of these other folks that are streaming music or downloading it, it is not just a little bit. It would be like you came in and someone took 90% of your income next month. And I'd almost make it sound like these guys come out and said, I can't use that one. I'd get in trouble. I'll have to think of something else. But, we beat you up yesterday, but we're going to be friends today, and I'm still just going to give you 10% of what you made before. But I have a feeling that we're probably going to see the leaders start making their own streaming systems out here that will encourage music, and not only music to listen to a single song, but maybe longer-term things like an entire album where you can get more than a one-hit wonder. You can't fill a 500-seat auditorium anymore with artists of the last few years. Garth Brooks, my guess, is going to fill auditoriums this summer, next summer, and Taylor Swift all winter long. But again, there's that false equivalence. Think about eating 16 ounces of peanut butter in a single setting. Tough. Anyway, we'll catch you later.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And had a question in the den, and the question is: would you kindly share your thoughts upon the interpretation of Obama's public stance on net neutrality and what this may mean for us? I don't know, mean for us market-wise or mean for us as consumers. I'll try to cover both sides of that before we get into the charts. For those that don't know what net neutrality is, it would be basically saying that I have a package, and package A came from one company, package 2 came from another company, and let's just say one had nuts and bolts in it. The other one had a few CDs on it with Taylor Swift on it. I'm going to charge you a different amount. Although the weight and size is the same, I'm going to charge you as UPS a different amount to get one package there, and I'm going to charge you a lot more because I can. That's basically it. And on net neutrality, the idea is that Comcast or Time Warner or any of these other big conglomerates will try to charge you more for stuff that you need with high-speed internet, i.e. movies, and if they can't get it from you, they'll get it from Netflix or they'll get it from somebody else. So the idea is, maybe you're from, I don't know, California, and maybe you're from Florida, and you're driving across a highway in the middle of the United States, maybe in Kansas. So we're going to charge you one price because, of course, you're from Florida, and I'm going to charge you double because you're from California. So as you drive across the toll road, you pay twice. It is about as nuts as anything I've ever heard, but of course it is what they think that they can get away with, and there is no greater evil than the cable internet companies. I know some people think that healthcare companies and drug companies charge inordinate amounts, but no one just kind of gives them the keys to the kingdom. They have to work hard to make a drug that works and get sued often when the drug doesn't work as expected. For everything that's known and not a problem, they buy all the equipment from somebody else. They are nothing but a service provider. Mostly they spend their time sticking their fingers in the eyes of their clients and their customers and cheating them at every single turn. So if I was going to pass a law, it would be two-pronged. One, net neutrality, and two, you could get there would be a special law that if you were cheated by any of these companies, you got to bang on the CEO as hard as you wanted to with a shovel. These guys are not wonderful guys, and they're pretty horrible. And all you've ever had to have is a account with any of them for cell service or internet, and ask if your business was run like theirs and they treated you so poorly, would you still be in business? And the answer is that they pay off politicians, always have, always will, and that's why they exist. Now, the insurance industry is not a greater evil. They have at least some kind of people that are looking over the shoulders. These guys literally get away with cheating people every single day. The insurance companies end up in court. This never rises to that level. So they get to steal a great deal more than the insurance companies. When the insurance companies try to steal money from you, there's normally a lawyer willing to take the case because there's going to be a bunch of cash there. No one's suing somebody for $15. If they do, it's a class action one, and you get $1 off your bill 10 years from now. So to me, they're a greater evil than the insurance company, although probably cousins in the evil department. Anyway, somebody in the den. Anyway, so Obama's stance. Basically, he's saying, and the only thing he can do in here is say that they can reclassify these internet companies as a telecommunications. I'm trying to remember the technical name for it here. Reclassification to Title II is what it's called, and that would mean that they are a common carrier like the phone company was and Ma Bell, and because of that, they are going to be pretty much what they have to provide, how much they have to provide it, what they have to do, and why they've been hit so hard. Now, he can't really do anything other than sign it, but I think if you wanted to look about what he said yesterday, is that he will sign a bill that says we'll reclassify these companies as common carriers. And just from their history and the evilness that they've put on people, I don't have any problem with it. If you think the mob is an ongoing criminal conspiracy, these guys, all of them, even Verizon, which I love because they have the best service, are more than willing to cheat you, and if you pipe up about it, they'll turn off your service and try to screw you over, so you won't. In fact, one of the guys in the one of our engineers in here says a friend of his told him about a time when Bright House installer cut his antenna cable because he was getting free TV out of the air when he was installing. I assume that's when they were installing it. I've heard 1,000 of these stories. I've been subjected to them, so I don't have any problem. They are not good members of society, and not just trying to shield themselves, but actively be an ongoing criminal conspiracy to cheat their customers. And, man, they got enough cash to buy protection. But it'd be very interesting to see it. There are a few people in Congress that got a lot of cash to run, and that was a issue. I don't think that's going to be enough. There's only about 5 people in the Senate. So as far as I know, the reclassification would go through the House, and with only 5 people opposing it, I don't think anybody's going to go to the mat for these guys. I think they're going to make a lot of noise because they got cash from the election, but that would be it. Anyway, we're going to go to Don in Odessa and take a look at, I think, something that would cross your palm. Is that what we're talking about here today, Don?
Hello, David in Clearwater. Yes, indeed. I'm asking about silver, and it looks to me, and I want to hear what you have to say, like a 3-gap play here.
It certainly is a short one, yeah.
Okay.
I've looked at it, and like I said, it is not uncommon, especially when markets move sideways, to get real big movements. Does that mean that the down move in silver is over? I don't think so. But could you get a huge intraday race over a couple of 2 or 3 days, or even a day where this thing just jumped $1? I think you could.
Okay. My concern on looking at the chart is that the volume is low from the last swing point day before yesterday.
I'm not worried about that. I would much more be looking at the high volumes for all these gap downs.
Yeah, I know it gap down on tremendous volume. So
the volume up on these things, on these 3-gap plays, can be light.
Yeah.
All it means is that everybody's on one side of the fence.
Okay,
So,
I think I'll take a shot at it.
I wouldn't want to be, what you don't want this doing is closing below 14.64.
$14.64?
$14.64.
Where is that figure at? Why are you doing that? Oh, I see.
November
that. Yeah.
5th.
Okay, yeah. Yeah, of
Which
course.
is the low. You don't want this thing
that long.
Yeah, you don't want to be anything longer than that. I don't like the risk reward out here, though. That means that you've got whatever this is, $15.25 right now to $16.50. So that's $1.25 on a $15 trade. Mm-hmm. Rather marginal to me.
Yeah.
So that would be my only comment on it. Is it a 3-gap play? Certainly looks like it to me. Is there $1 above? Yes. I'm looking. I want to see a trade that probably has 30% in it, because most of the time I'm only going to get 10 or 15 of it. If I start looking at a 10 or 15% trade, a lot of times all I get is 3 or 4% out of it.
Yeah.
So that would be the only thing. I'm not saying that don't do it. I'm just thinking my thinking would be not enough meat on the bone for this. Now, If you were thinking more and it's going to go over 1650 and back into the trading range, that would be a different kind of thing. But you've got monstrous resistance at 1650 out here.
I agree
So your trade is whatever it is, 1525 to 1650 out here, and you're going to have a sea of people that are wanting to get their cash back from all that trading, the congestion zone from September 30th to, what was it, the October 29th?
Yeah.
So to me, that would be the problematic part of that trade. Is there the question I always want to know? Is there enough meat on the bone? I want to see 30% move possible. I know I'm not going to get that, but at least I'm going to have to get a few of those out, and that one, Wyatt has probably a good chance of filling that, and maybe with a market not moving very much at all. Are you trying to settle for less than you normally would, or is this a trade that you would have done already?
I just saw this, and it seemed like such an obvious play. And looking at silver itself, it's a key reversal if it closes higher.
I've been out fishing. I got 2 positions, long-term positions, and they are all about a short squeeze all the way into Christmas.
Oh,
I'm
really?
looking for some other ones to go in my daily newsletter, and I really haven't found anything. And not surprising with a market that's 1 point up or down or 5 points up and down every day.
Yeah.
So that's it. Now, I think you've got everything that you're looking for in this, i.e. a flat market. Gold and silver moves extremely well in these. But the question is, it can move $1 down just as easy as it can move $1 up. But I like the 3-gap pattern. If you're willing to take $1 out of a $15 stock, then you can do it. It wouldn't be one that I took just because there's not enough meat on the bone and enough risk reward.
Yeah, I understand.
Yeah, I'd want it $15.25. I'd want to be looking at $18 on this to take the trade. And if you think that's you could get that, then I think that's something that you'd want to do.
I haven't looked at any silver stocks in relation to this. So maybe I'll
like
do that
silver,
instead.
wheat, and SLW.
Yeah. Maybe I'll do that instead. I'll have to look at these and see what I can come up with.
Yeah.
I got to hurry, though.
You got $20, maybe $20.73 on silver wheaton. So that's from $19, so you got a $1.70 trade to the upside.
That's almost 10%.
Yeah, which is not enough for me. I want something.
You're greedy. You're just too greedy, David.
You know what? It served me well.
I'd see that a lot better than me. I'll tell you that.
Anyway, I don't know about that, but I would try to be greedy when, especially the old saying from I forget who it was. Buffett is famous for it now. When everybody's fearful, try to be greedy. When everybody's greedy, try to be fearful. And in this trade, I would want to be greedy, and that's why I would say that even like on SWL, what you would want is some kind of test out here that makes you think that the bottom's in at on silver wheaton at maybe 1657 or something, like a retest of that, and that you maybe get back up to the $25 level for this gap on the way down.
Well, now
which
that
I think
you
is probably the next move up if you do get a reversal in silver and gold. That $25 level on SWL, to me, from $16 to $25 is pretty good. Even if you only get $21 or $22 out of it, a better idea that at least there's a lot of meat on the bone.
Silver wheaton has earnings tomorrow, but you know that 1657 was a retest already of 3 days before that. On lower volumes. On the
SLV?
Yeah, no, SLW was a retest. The 1657 you mentioned was a retest of the 31st on lower volume. But they do have earnings tomorrow, so I wouldn't do that.
The 31st of what?
Of October. The
low on that day was $17.37. Or excuse me, that was the close. What was the low? $17.03, and you got to $16.57. So you're saying the high volume low is the test of
well, I think we have different figures here.
I guess you could look at it that way.
Let's look at this again. On the 31st, I have a low of 1678, and on the 5th, I have a low of 1657.
Yeah, if you think that if you think that 4 days is enough for the test, I would like to see probably 2 weeks between those.
Man, am I learning something?
Yeah, to me, that's not enough of a time and enough of a movement. To me, I'd want to see something like a week, 10 days, 2 weeks, a month for lows. I'm going to look through some charts in the last segment, and you're going to see the time frames that I look at for retests.
Okie dokie.
Okay.
Well, thank you, David.
Thank you, Don, for the call. We'll be back in a minute.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. When you first learn something in life, you have the most questions as you begin to apply that knowledge, which is why Steve Rhodes came up with the idea for his 7-week trading program. It all begins Saturday, November 22nd, when Steve Rhodes will host a live 3-hour morning workshop where he'll teach his attendees the precise methodology he uses when placing trades. You'll then receive 6 weekly updates each Monday morning discussing the possible alerts currently setting up in the market. Steve will then bring everyone back together for a final 3-hour live workshop Friday, January 9th, where he'll discuss the methodology that went into each of the 6 weekly updates, making sure that you're confident in applying what you've learned so that you can begin navigating the market on your own. You can sign up right now for this entire 7-week trading program with Steve Rhodes for a one-time payment of only $395. If you're a Mastering Probability subscriber, then you can save an extra $100 off that price. For all the details, visit the front page of TFNN.com right now.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
Had an email from, doesn't say, Golf Guy. That's all it says. I don't see anything else out here. About Control4 Corporation. Provides automation and control solutions for the connected home. Kind of an Internet of Things company. They've got some SDKs and stuff. Not a lot about them already and what they're doing and money. But this is an interesting pattern out here. You got about 5 days or 6 days of this thing moving sideways out here. So I would be keeping an eye on it. You're probably going to get a huge move out of it. I don't know which way at this time, and this could go over the next week going sideways, but this thing's building energy out here. You would have loved for it to test this low on October 10th at $11.76, which it has not. And the only safe thing to do would be to test that already. In our previous phone call from Don, from Odessa, we were talking about when you look at, in the time frames that I look at for tests, you know, a day or two goes by is not a test to me. It's over maybe a week or 2 weeks. Umbrella here is testing the previous high of September 30th. with 4.5 million shares. It finally got into that high on the 3rd with about 3 million shares, kind of pulled back into the trading range the last 3 days, 1.6 million shares, 1.9 million shares. So to me, it is more of an issue of how it comes back up here later, not a just indiscriminate bounce, but some people taking a look at it. To me, here's another better look at a test of a high. That's Best Buy. This thing gapped down with monstrous volume with 85 million shares on the 16th of January. It's finally come back and pretty much filled this on September 19th, $35.53, 8.7 million shares. With, of course, the last few days, half that, 4.7 million shares, within 0.5% of that high of a few days ago. So when I look at these highs, whatever they are, I want to see a couple weeks, month. I want to see some trading between that. I want to see how it comes back up and see the volume back into that high. JP Morgan, another one of these companies that has gone after the September 19th high, $61.85. Now come into it with 10 million shares as of yesterday and 12 million shares a few days earlier. So are you close? But you're still short 18 million shares. To me, you've got September 19th through November 10th. Now, that's a test. That's the problem with tests of just a few days apart to me is that it's hard to distinguish or know if that's actually a signal or this is just noise. And to me, this is a much better bet that what we're seeing is a signal, not noise. Lifetime Fitness, LTM. We've got this one testing the highs, May 22nd, $56.78, 2.3 million shares. This thing's up here at the highs. Very light volume over the last few days. Yesterday, 470,000 shares. Today, 182. But, of course, these fitness companies, just like the Weight Watcher type companies, are all pretty much loaded to right after the first of the year. And these things run with a lot of light volume right up into the first few weeks of January. And seasonally, they have that bias, so you have to watch out. Another one is the darling of Wall Street, a better test out here. I don't think I'm going to have time as we've run out, but you can take a look at this one. 5 million shares to 1.7 million shares for Palo Alto Networks. Anyway, we got Tom O'Brien coming up next. Remember that you should sell when you can, not when you have to. And catch me tomorrow, same bat channel, same bat time.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You're watching Tiger TV.